I think a lot of you have had maybe a frustrating winter. I say that because the markets have been extremely choppy, at least in the Chicago Board of Trade and really around the world. Cash wheat has led the market down lately, and as we look back into the end of February, it was probably the biggest week that we have seen in terms of ownership change. By that I'm saying is that there was a movement away from speculative funds to commercial ownership, and so we now have stronger hands. We're moving into the spring in which really the commercial's longer than he has been in years. That also tells me that farmers are probably have limited sales on the books. Now, they've done their revenue insurance policies here at the middle of March. As we go forward, though, I think that farmers will be more focused on planning, and while the cash markets will stay relatively strong, this should give us some upward lift. Now, ahead is the stocks and seedings report, always unpredictable at the end of the month. Thereafter, it's all about Mother Nature. But I think as we look at the markets, I hate to get overly bearish here today at 550 or under relative to December corn, or even 13 or under relative to November soybeans. In old crop, what we have is a story going in terms of soybean oil. The NOPA crush data told us that at least for the month of February, we consume more oil domestically than we produce. This doesn't happen often. It normally happens during the summer. So that may be the first kickoff that renewable diesel in that demand-led market we've been looking for is about ready to go forward. So lots of interesting things. I think the markets are going to provide opportunities heading into spring and summer. Let's stay on top of it all. But for today, I hate to be overly bearish.